Please, what do you think? Do we need, in reality, standards of responsible financing? It means, do we need own responsible financing standards for development financial institutions, especially? And I can say that all answers are true. The first, yes, because 80 investors today are planning to implement SDGs factors near future. No, because 84% of consumers feel misled by green buzzwords. It's mean greenwashing. Yes, because ESG rating often do not reflect reality in the company, and it means we need own standards for responsible financing. What do you think? I think we have such 1 or 2 minutes to voting for you. And during your voting, I have a small speech about the main idea why we are here today, why we talk about responsible financing standards, especially for developing financial institutions, and what is the role of VEB.RF of the Russia this year in BRICS region. Do we have some answers or not? Could we show the result of our question on the slide? No, we can. Oh, yes, we can. Okay. The most part think that yes, because investors are planning to implement SDGs. But as I said, I have also my opinion why we need it, and it's the last question, the last answer of this question, because today in reality ESG ratings often do not reflect how company prevent internal risks in this policy. And if it's possible, please, could you put my presentation on the screen? And I would like to start my small speech before our speakers. Thank you. The next slide, please. And the next slide, please. Thank you. As I said, today we talk about 2 things: development financial institutions and responsible financing. I'm sure that development financial institutions today play a huge role in the economy of each country. For example, today we have almost 500 development financial institutions. And it means that development financial institutions not only put the money to the project, but they have a special function to create such new models and such new markets. For example, in Brazil, we know that development financial institutions started to put money in green projects, for example. And in many countries, not only of BRICS region, also was a headliner to create, for example, social obligation, green obligation, sustainable project, sustainable infrastructure, and the others. And you can see that today in Russia, in 2020, VEB.RF also decided that it needs to have some new models of projects which could prevent internal risks on the very word type of risks, from ecological risks to the task risks. And in 2020, VEB.RF launched the joint work with developing financial institutions of BRICS region on responsible financing. And please, next slide. It means that it's one of the function. No, please, prevent slide. It's one of the function of developing financial institutions to create new model. But at the same time, we have challenges, we have problems. And these problems also show us why we need own standards for responsible financing, especially for developing financial institutions, especially harmonized standards on BRICS region. The first, as I said, today ESG ratings not good and a reliable instrument, not only for investors, but also for development financial institutions to be sure that this project is sustainable. Yes, of course, we can see that there are many ECG ratings, but in reality, do we know the methodologies of these ECG providers? Do we know how ECG providers build submetrics? No. For example, the findings of OECD show us in 2020 that the most high ECG company in ECG ratings with high E pillar, ecology pillar, pollute more than other company. That's why we can say that ECG ratings now, it's not often the good instrument to be sure that this project or this company is sustainable. The second main problem why we need own responsible standards for responsible financing, it's BRICS countries have different international obligations. And it means that development financial institutions of BRICS countries also have different obligations. For example, we can see that not all BRICS countries are members of International Chemical Classification. And in the result, we can see that enterprises from one of the BRICS countries could use substance, and accordance to national classification of chemicals, this substance is not dangerous, but according to international classification, it is dangerous. It's the second problem. And the last problem, that we have not only different international obligations of BRICS countries, but we can see that we have a different approach of DFIs of BRICS region to adopt responsible financing. We can see that all 5 development financial institutions of BRICS countries have such standards for responsible financing: ecological policy, corporate governance standards, and others. But in the details, in the mechanism, in the tools, we can see such differences. For example, for development financial institutions of BRICS have 3 types of categorizations of risks, A, B, C. But China Development Bank have 4 types of categorizations. Or I can show you another example. Not all DFIs of BRICS have blacklist of industries. It means industries or projects in which these DFIs could not put the money. Such have, such don't have. That's why we can see that there are some difference between development financial institutions in its policy on responsible financing. Please, next slide. That's why, as I said, in 2020, VEB.RF initiated this joint work with BRICS development financial institutions to create memorandum of principles for responsible financing. And on the slide, you can see the result of this hard work, and you can see 8 principles. We can classify these 8 principles on the 2 main parts. The first, the 3 principles which work on internal mechanism, improve the internal mechanism. Integration on environmental, on social due diligence in the lending process, develop new financial products and services like green financing. And the second part about how development financial institutions work with clients on promoting inclusive solutions and comply with international human rights standards, conducted business in an environmentally friendly way, supporting local communities, encouraging stakeholder engagement, conducted business in compliance with good corporate tax and anti-corruption governance practices. And now we have this memorandum. I hope we will sign it in November on the summit of BRICS. But I'm sure that it's not the final of our work, because memorandum of 8 principles, it's very good. It's a very good start to joint work. But in the future, in the near future, we need to have some practical guidelines how each of these 8 principles will work. Detailed step-by-step roadmap, as we can say. And now we have a draft of these guidelines. And I hope that developing financial institutions of BRICS country will support this work and we can continue. Now I need to stop. And I want to present you our first speaker, Yuri Korsun. Yuri Korsun is a deputy chairman of VEB.RF. Yuri, hello. Do you hear me?
Hi, everybody.
Hello. And I hope, Yuri, you can share with us the plan of VEB.RF as a headliner of this big work, of this hard work. Which plan we have in the context of responsible financing? Do VEB.RF would like to continue this work? And maybe you can share with us some experience in practical context on responsible financing, for example, in green financing, because we know that green financing is a part of responsible financing. And we know that VEB.RF now has a methodology and maybe project in this context of green financing. Please, Yuri, thank you.
Thank you, Antonina. Again, hello, everybody. What I would like to start with is the following. We all, as development institutions, probably have two main roles. And those 2 roles are especially visible in the time of crisis. First, usually we help our governments and businesses to deliver anti-crisis measurements towards the business. It's a short-term activity, usually in the time of crisis, but virtually all development institutions are involved in that. And the second part of our role is basically to help the governments to deliver long-term development goals. And today we are facing a very special crisis, the crisis that doesn't have anything in common with the previous crises we had. And those 2 functions are very obvious that have to be and they have to be performed by the development institutions. A very short example, in Russia, when the crisis started, the main task for the government was to save the jobs. And they started implementing a program when they were ready to subsidize interest rates on special loans to the companies that are ready to retain the workforce as it was at the beginning of the crisis. And it was done through commercial banks, but in order for commercial banks to do that quickly and in a broader way, all those commercial banks received a guarantee from VEB.RF. So basically, VEB.RF as a development institution provided special guarantees to other commercial banks, which issued hundreds of loans, mainly to small and medium enterprises. And the government added interest rate subsidy towards those loans, so they were not that heavily influenced the cash flow of, especially, as I said, small and medium enterprises. It's just an example of short-term activity that we rolled in. We issued in total close to 6.5 billion in guarantees, and in size, it's very close to our capital. It's just an example. But the main role of development institutions is to promote long-term development. And we understand that now long-term developments must be sustainable. It must be resilient to future crises. And in this respect, we think that responsible business behavior is one of the main principles that should basically be incorporated in all our activity. But what I would like to kind of tell you a little bit is exactly what Antonina mentioned is our experience in green financing is a part of this whole exercise, but we kind of did a lot of this year, and I wanted just to share that experience because that approach can be multiplied later when we are talking about how we can implement the broader sustainable principles of financing. Russia is not, let's say, on the level of accepting green financing compared to, for example, Europe, etc. We are at a very, very early stage, and there were only few borrowers that managed to issue international recognized green bonds, but the whole idea was just flying in the air, and we needed to do something. We decided that the first thing to do is to basically put up some rules. So we decided that there should be rules, standards, and common approach in the market. So what we said, okay, we are a development institution, we're not a commercial bank, we can spend some time and efforts creating a certain methodology. So what we did, we talked to several ministries, mainly to the Ministry of Economic Development, and formed a group that started writing a methodology that should define what green financing is. So basically, it's a set of rules, set of standards that should be accepted to everybody. So we wrote that document and we said, okay, we did it, but it should be acceptable. So we went to the broader audience. We talked to most of the banks in the market. We talked to dozens of clients. We talked to other ministries. We talked to expert communities, and we were collecting comments on our methodology. So, as I said, it should be accepted by everyone. So we did that, and mainly that methodology says that there is Russian taxonomy, and it's already a set of rules which projects can be recognized and green. We wrote a description of processes related to the verification process, and we said that we will hold the methodology, but the verification will be done by the market participants. In Russia, we mainly hoped it will be picked up by the local rating agencies. So they will do the normal rating work, and they will be the ones to talk to the issuer, to the borrower, and put a green label on an instrument that they would they were thinking about putting in the market. So we wrote a verification methodology and agreed it with the most Russian rating agency. And basically what we said is the following, that a Russian green project first should be complied with the Russian taxonomy. Second, it should focus on achieving one of the US Sustainable Development Goals. So it's important that what we do is linked towards the international accepted approach in this. And finally, we said that it should contribute to achieving the national development goals. So basically, the methodology that we did still has some local sense to it. And what happened next? We wrote it, we talked to the community, and recently, just a few weeks ago, a first issuance of Russian railways was done on the local market under this methodology. So basically, Russian Railways is the company that already has international experience. Last year, they issued one of the first in Russia green bonds on the international markets, one in euros, one in Swiss francs. So they at least knew what it is, and they were decided that they are ready to be piloting this approach in the Russian market. So they went to the Russian rating agency Expert.ра. That Russian rating agency confirmed that the issuance is a green one. And actually what they was doing, they were replacing diesel trains to electrical trains, basically doing work that is very much related to the CO emission, climate, and so on and so on. So the use of proceeds was exactly for the green purpose. So Expert.ра agreed, and we confirmed that Expert.ra did it according to the methodology, and we placed on our website, on the Russian Railway website, information that this is a Russian local, let's say, green issuance. This is what we did. So we kind of tried to set up the set of rules. We already have the first issuance done in the Russian market, and frankly speaking, that was a very unique issuance. First of all, it was the first in Russia perpetual bond. It was the first bond issued under the Russian methodology in terms of green financing. And it was generally the largest issue in the local markets if we take aside the government issuance. So basically what we did has already been tested by the markets. And I think that in general, this is exactly how we want to approach the principles for responsible financing. We put ahead those 8 principles so we all can agree on those principles. And then the idea is to find the way to bring it into our internal and external procedures. So looking within VEB.RF, we are now thinking how we will be incorporating those principles into our activity. For example, into our risk management process, into our evaluation of the project, into our structuring of the project, in the selection process, and so on. So what we would like to do next is, having those 8 principles, we need to agree how we basically follow those principles and then incorporate them into the procedures that we already have, expecting that our future portfolio will look much better, not only because it will be labeled green or ESG or sustainable or responsible, etc., but because it will be less riskier, more socially oriented, and it will definitely reflect the role of a development institution like VEB.RF, for example. So that's a few examples of our activity which I wanted to share with you, and if there would be any questions, I will be happy to answer those.
Yuri, thank you very much. As you can see, VEB.RF not only was a headliner of international standards for responsible financing, but also has a plan to incorporate these 8 principles in the internal work. It's very important because I think VEB.RF don't want to stop this work and would like to continue. And we understand exactly that responsible financing, it's about risks, it's about how to finance, how to prevent risks in project on the very broad type of risks, yes? And the green financing, it's about which project we would like to have. As Yuri said, now it's one of the main topic of VEB.RF, it's green project. Maybe in the future we can see some more broad type of project, sustainable project or social obligation or others. We know also that VEB.RF also has another activity about sustainable infrastructure, for example. But today we spoke about responsible financing standards, and the responsible financing standards, it's in green project, in sustainable infrastructure, and in mineral project. It doesn't mean which project. We talk about type of risks. And now, thank you very much, Yuri. I would like to go far away to the second part of our session, because today we have a 3-part of session. The first part, it's about initiative of VEB.RF on this memorandum of 8 principles for responsible financing for developing financial institutions. The second part, it's about opinion and the experience of developing financial institutions of BRICS countries, China, Brazil, South Africa, and India. We would like to hear from our friends its experience and how they see how BRICS countries could help to business to develop responsible financing. And firstly, we also have a question, please. I would like to see this question on our screen. It's a question about what tools BRICS governments should use to achieve responsible behavior. There are 3 types of answers. Hard regulations, like French law on due diligence. Or maybe it should be light recommendations, like recently Bank of Russia issued recommendation on responsible investment. Maybe it should be no direct tools, and the private markets will approach as necessary, like OECD guidance on garment and footwear. I can see I can say that we see the tendency that OECD countries, more and more OECD countries prefer the first answer and to put hard regulation. One of the example you can see the green taxonomy of European Union, and in this taxonomy you can see one of criteria of green financing is what green project should correspond to responsible business conduct standard. Please, could we see the result of our question, of our voting? Okay, very democracy. Yes, the most part of our audience and our speakers think that only light recommendation, and it corresponds on our way, because our memorandum, it's light recommendation, it's just a standard which principles could help to develop responsible financing in developing financial institutions of BRICS countries. Okay, thank you very much. And I would like to present you our next speaker from Brazil, Sergio. Sergio from Minas Gerais Development Bank. Sergio is president of this bank. And please, Sergio, could you share with us experience of your bank in the context of responsible financing? Sergio?
Thank you, Antonina. Good morning, good afternoon to everyone. It's a pleasure to join you, to join also some of my colleagues from other development finance institutions, private equity funds, commercial banks, and other institutions. I will provide you with a quick overview of our good bank in Minas Gerais. We are the largest state, so regional development bank in Brazil. We're celebrating 58 years of existence this year. And I'm coming from a previous experience with the new development bank in China, where I served as Director General of Strategy for almost 3 years. Could we go to the next slide? Thank you. So this is just an overview of where we are. We are in the heart of Brazil. We are a state that is very large in terms of area, is larger than France in territory. We have the third largest GDP, second largest industrial park, and the largest number of municipalities in Brazil with 853. So it's almost a country within a country, so to speak. So in the next slide, we were founded 58 years ago. Here you see our headquarters and our nearby annex building, where we host a fintech hub in a joint venture with Santander Bank from Spain and Harvard Angels. We generated almost 20,000 jobs this year so far, and a very large impact on production and also in taxes. We are present in 90% of the 853 municipalities of our good state of Minas Gerais, and we are fully controlled by state of Minas Gerais is our main shareholder. In the next slide, this is our main approach, and I would like your focus on this specific slide, which I will spend a little bit more time than the other ones. So our main approaches to responsible financing are three-pronged. So first, BDMG as the development and knowledge platform, aligning SDGs to the local need. So that is a path that we are pursuing through the implementation of a robust framework on sustainable bonds, which we are just about to issue. That entails the alignment of our credit portfolio with the SDGs, and of course, improving the monitoring and evaluation processes of the bank. We've been establishing partnerships and technical cooperation with the international development financial institutions, such as the Inter-American Development Bank, the European Investment Bank, the French Development Agency, and other banks elsewhere, including the Latin American Development Bank, Fomplata, and the New Development Bank and the Asian Infrastructure Investment Bank, many of which all BRICS countries are also members. We also very much involved in identifying new investments and financial solutions other than providing credit and equity. That involves guarantee products and also project preparation, and also funding third-party managed venture capital funds that are aligned with the 2030 agenda targets, so the SDGs. We are working with our clients to promote these solutions and very close to the local community. So in a sense, we are a last mile bank, very close to the grassroots of everyday life in small municipalities in Minas Gerais, but at the same time linking them with the global agendas. And one of the most important tools to do that is our digital finance platform. So we are the first digital development bank in Brazil. We've been operating this platform for over 8 years now. It's an online platform, and we are providing credit to different small and medium enterprises in a very speedy manner. We're also using that platform for gender equality and health sector, and also more recently to municipalities with very low human development index. And lastly, improving, which is very important, the internal mechanisms in compliance with the environmental, social, and governance standards. So we started our social environmental responsibility policy back in 2013, and it was very interesting to hear Yuri Korsens from VEB in terms of VEB also pursuing this path. I think it's a very good way to kick off and start the whole process, right? And also in other internal projects, we have set up our own renewable energy unit in the bank. We literally installed panels on top of one of our buildings. We also set up anti-corruption, anti-money laundering policies, and started a full-fledged program of culture change among our employees. And lastly, we have other programs related to the communities where we are involved, including on culture, on equity, and on promoting diversity, and also other issues. On the next slide, we kind of just an overview of the SDGs and the news that we are the first development bank in Brazil to publish a framework to raise funding from sustainable bond. So this is on our website. We already obtained a second party opinion from Sustainalytics, and we have a little photograph of one of the projects that we are financing with those proceeds. On the next slide, we can see an overview of the alignment of our portfolio as of September 2020. So 83% of the portfolio fully aligned with 13 of the 17 SDGs and 36 of the 169 targets. This is a work that we've done with some capacity building and cooperation with the Inter-American Development Bank, and we see the logo there, and also Citaui, which is a consulting firm specialized in sustainable finance here in Brazil. On the next slide, we provide you with an overview of some of the recognitions and some of the initiatives we've joined recently. So we were awarded the best socioeconomic impact from CFI in London for Brazil 2020. We have joined the UN Global Compact as a member earlier on this year. And we've just been awarded by the Latin American Development Finance Institution as the best in terms of fintech hub. And on the other side, we have a very successful experience in fundraising with multilaterals, commercial banks, and development agencies. As we can see here, we've completed so far in the last 12 months 4 on-lending programs. We're just about to sign the 5th one next month. So all of that kind of a result of these programs that we've been implementing at the bank, which have helped us diversify the funding for our good bank. On the next slide, just a very quick overview in terms of our programs regarding small and medium enterprises, which accounts for more than 60% of employment in our good state and are very important in the value add that is taking place here in Minas Gerais. We service them, 98% of them, through our digital platform. We were able to reach more than 26,000 companies. And nowadays we're able to deliver credit in less than an hour. So it's a very interesting platform. We're partnering very soon with another national development bank of a BRICS countries. I will not disclose yet, but this is in the making. And this was especially important during the COVID pandemic in order to provide the necessary support for the survival of these companies and the preservation of these jobs. On the next slide.
Sergio,
yes.
Sorry, we don't have many time. If I can, I would like to return to your part of speech where you said about sustainable bonds. It's very interesting in the context of responsible financing standards. Please, could you share with us which tools do you use to monitor project in the context of sustainable bonds? Which tools your bank has? Yes,
so sustainable bonds, the issuance is really the last portion of the process, right? So we, as I outlined in the different portions of my presentation, it's a long way that we have pursued, starting with the environmental and social governance part, including the internal policies. But basically, other than that, and changing the internal culture, is really the process, setting up a process of integrating these policies and the monitoring and evaluation process in order to select projects that are eligible, and really having a second party opinion in order to have an independent evaluation of our policies and of our processes, and most important, of the use of proceeds. It's important to reference also some of the normatives, regulations from the Central Bank of Brazil, so that we have some kind of a systemic classification on management, and we've been doing quite a lot of efforts also on the risk side. Other than that, we issue a annual sustainable report, and also a measurement of the development impact in several manners. So this whole path allow us to reach our investors in a very credible and manner so as to ensure the successful issuance of our bonds.
Okay. Sergio, thank you very much for your speech. Thank you very much for your time. We need to go to the next speaker, sorry. I would like to present you Mr. Prahalatan from Export-Import Bank of India, Deputy Managing Director. And I would like to say that Export-Import Bank of India is one of the 5 development financial institutions of BRICS countries which worked with us on the memorandum of 8 principles for responsible financing for DFIs BRICS. Mr. Prahalatan, please, could you share with us experience of your bank in the context of responsible financing?
Thank you. Thank you very much. Somebody will be sharing the screen.
Yes.
Yes. Thank you very much. I am Prahalatan, Chief General Manager with the Export-Import Bank of India. Thank you, VEB.RF and the OECD Center in Russia for giving us this opportunity. And we have been closely working with VEB.RF on the discussion and negotiation of the MOU, which we will be likely to be signing as a part of the BRICS presidency of the Russian Federation. Next slide, please. Exim Bank was set up in 1981 under an act of parliament to finance, facilitate, and promote India's international trade and investment. We are 100% owned by the Government of India. We commenced our operations in March 1982. The principal mission and vision and the objectives is to provide financial assistance to exporters and importers. And also, we are functioning as the principal financial institution and coordinate with other institutions engaged in the financing of export and import of goods and services. And overall objective is to promote the country's international trade. While doing so with the public interest, we will also be acting on the business principles. Next slide, please. Okay, no regulation as of now. In this slide, I am just briefly presenting on how India is moving towards the responsible financing. Till 2007, there was no directed or kind of a regulation which we had, which raised on the environmental concerns in the credit processes. In 2007, the RBI issued an advisory notification to all commercial banks that described the concept of environmental and social risks, and also it outlined the possible mitigation measures also, more like a suggestive measures. Overall, if you look at it, the guidelines provided a general framework on the concept of corporate social responsibility and environmental and social guidelines, and also the importance of non-financial reporting, and especially on the sustainable development concepts. The financial sector's role in providing financing for green projects, especially some of the renewable energy projects like the wind and the solar, and also introducing environmental and social risk assessments in the bank's operations and activities. These were the broad directions given by the Reserve Bank of India. The direction also included a plan of action for banks, which reiterated the importance of an awareness of the social and environmental impact.
Mr. Prahalatan, sorry to interrupt you. I would like to ask Mr. Van Kuhn from China to do mute, please, your phone, because Mr. Van Kuhn from China, please, could you? Thank you. Thank you. And Mr. Prahalatan, we have just 4 minutes, please. We don't have many time, just 4 minutes. So.
Yes. I am going ahead. Next slide. Next slide, please. Okay, in the year 2009, then the Ministry of Corporate Affairs, they have recommended how the responsible financing could be initiated. Now I am coming to India Exim Bank, how the ESG guidelines are being framed. RBI has stressed on enhancing sustainable development and corporate social responsibility and also the global initiatives. The Indian Bank Association, they constituted a working group with the participation of all the leading financial institutions, and India Exim Bank also participated in the discussion. And in June 2019, we set up a procedure for social and responsible management system The objective was to identify and assess the social and environmental impacts, both adverse and beneficial in project operation, avoid wherever not possible, minimize or mitigate or compensate for the adverse impact, and also ensure the affected communities are appropriately engaged on issues that could potentially affect them. Next slide, please. Quickly to go, Exim Bank, we have set up a procedure for SEMS to ensure that the bank's funding, next slide, please, would not be provided to clients engaged in certain activities. There is an exclusion list. And also how we will be doing the assessment of environmental and social risks that include, among others, analyzing whether the project meets the requirement and applicable environmental regulations and guidelines, what are the preventive measures undertaken, and how the indigenous people, stakeholders, are acceptance of the project. And this is the last slide. The bank has also in place a responsible financing committee, which looks into the issues pertaining to the sustainable development. If the environmental and social impact assessment contains any adverse remarks or identifies any unaddressed environment social risks, the proposal would be referred to the responsible finance committee. Then the RFC, they have the authority to recommend or reject the proposal. Upon being satisfied with regard to the adequacy of suitable measures designed to address the environmental and social risks, then only the RFC recommends the proposal to the sanctioning authority. Just the last slide, please. So the ESG guidelines are all encompassing. These are the special aspects that would be considered. Project area being adjacent to the environmentally sensitive areas, historical cultural areas in the 10 kilometers radius, then the resettlement and rehabilitation activities, then assessment of water adequacy, pollution control measures, occupational health and safety, status of consents and permits. Next slide, please. Next slide. So these are some of the activities which I have undertaken. So I'm not dwelling much into it. Thank you very much for the time.
Ms. Prahlatan, thank you very much. I just have one small question for you. We know that the next year, India will be a chairman in BRICS countries. Tell me, please, what do you think? Could we continue and expand work of VEB.RF in the context of Memorandum of 8 Principles for Responsible Financing during your chairman in the next year?
Yes. See, generally, we get the recommendation from the outgoing presidency, and there will be several recommendations. Then definitely we will be picking up which are important, not only in the context of India's interest, but also the overall BRICS interest that we will be taking into account. Then the second one is, if this also goes into the BRICS declaration, whatever, whether it is called as St. Petersburg Declaration, so then it gets added weightage to it when we consider our agenda for the next year's the financial forum.
It's a very good answer. Thank you very much, Mr. Prahlatan. I would like to present you our next speaker. It's from South Africa, Development Bank of South Africa, Mr. Patrick, Chief Executive. And I would like to say also the Development Bank of South Africa was one of the 5 development financial institutions of BRICS countries, which also participated in our work to create this memorandum of principles for responsible financing. Mr. Patrick, please, could you share with us your experience and your opinion in the context of responsible financing?
Thank you very much, Antonina. Good afternoon to my colleagues from fellow BRICS countries and beyond. I mean, we are in the afternoon, and good morning to Sergio in Brazil. Really, I think it is something that as developing nations, we need to embrace, notwithstanding our still current challenges. As you can imagine, that we are not where the developed world is currently, but as the emerging economies, we have a responsibility to look at how best we could be much more smarter in terms of our environment, how best we could be much more smarter in terms of the sustainability of our economic activities, and how do we make sure that we contribute meaningfully to the better future for our future generations. We have that responsibility, and I think as DFIs, responsible financing is something that can never be up for negotiations, as we want to make sure that we are proud of what we do as peoples, and that we are proud of what we do as countries. And also, I think responsible financing is also giving us a chance to access some of the international funding that we would otherwise not have access to. So it's quite important that in our procedures and policies, as DFIs, we embed these requirements and make sure that we are able to reach out to our international partners so that we can be able to access those concessionary funding and grant funding as well that can help with our project prep or our early stage feasibility studies, as well as making sure that we can be able to structure our deals much more economically effectively.
Mr. Pratt, thank you very much. In the context of your speech, I have one small question for you.
Right.
Now that Development Bank of South Africa works with Green Climate Fund, GCF, to co-finance, yes, to co-finance climate-related project. Tell me, please, how do you evaluate these projects' social risks, not only environmental, but social risks? Do you see any social governance risk in this project?
I think actually that is quite key. I mean, currently we are dealing with the pandemic, and the socio-economic impact that this pandemic has had, especially in emerging economies, has been extremely dire. In our country and in our continent, it really laid bare the socio-economic realities. And we are one of the most unequal country in the world. We have our Gini coefficient index sitting almost at 6.678, and our poverty rate is sitting at about 60%. Unemployment sitting above 35%. So the socio-economic risk that we are facing as a nation is quite significant and is quite heavy. But as an accredited institution by the Green Climate Fund, what actually we have been able to come up with, we have actually had almost $156 million that we've received from the GCF in the past year. That actually is now on the verge of implementation. But the socio-economic issues are quite critical in that we have to make sure that there is an element of sustainability in our projects. We have to make sure that we minimize the social impact. We have to make sure that we are able to create sustainable jobs, that we are able actually to address our issues of social inequalities, as well as unemployment. You can imagine, as a country, our president, the President of the Republic of South Africa, has actually tasked the bank to drive the implementation of the infrastructure fund, which actually is we are hoping that we should be able to stimulate in excess of $100 billion over the next 10 years. But the agency and the exigence with which actually we deal and we drive the implementation of this infrastructure fund is extremely important. But again, what does it say? It says, how do we make sure that we are able to crowd in and catalyze the private sector to make sure that we are able to achieve the scale, to make sure that the triple challenges of inequality, of poverty and unemployment is meaningfully addressed. So these projects, I mean, again, it talks to sustainability. It talks to also the social positive impact. It talks to minimizing risk, the social safeguards that have got to be in place to make sure that our people are not adversely affected as a result of the projects being in place. It minimizes the impact on the water. It minimizes the impact on the health of our people where these projects are. We are also engaging on the just transition as a country. As you know, that our power utility, Eskom, actually generates, I think, just about 90% of our power from coal, which is fossil fuel. You can imagine the impact where these mining houses have on the social health of our people. But now we are engaging to see how renewable energy could be rolled out much more faster and much more effectively, because South Africa is a signatory to the Paris Accord, which was signed in 2015. South Africa is also a signatory to the Sustainable Development Goals at the UN. So now we have this responsibility to say, how do we help as a DFI to drive our country and our economy into a low carbon pathway, and also how do we make sure that by 2050 we are able to achieve a zero emission, so to speak. So this is quite an important challenge, but at the same time, as a bank, that's why we were able to achieve the accreditation. We have embedded these systems and these prescripts by the Green Climate Fund, so much so that our people actually have been adequately trained and well capacitated. We want to, I see you also, you want to interject?
Thank you, Patrick. Thank you very much for your answer, because yes, it was one of the main idea of VEB.RF, why VEB.RF proposed this memorandum of responsible financing, because we spoke about very wide broad of risks, from human rights, labor rights, environmental rights, to the tax compliance, anti-corruption compliance, and other types of risks in the project. That's why it's very important to have a unique position in the world between BRICS countries, the unique position of BRICS region in the context of the responsible financing standards. Patrick, thank you very much. I would like to present you our last speaker of this part of our session. It's Dr. Yu from Golden Credit Rating International Corporation from China, Head of International Business. Dr. Yu, could you hear us?
Yes, thank you very much.
Okay.
Hello, everyone.
We have just 5 minutes. Sorry for this. Thank you.
This is Yu Chengjiang, Director of Technical Committee from Golden Credit International Ratings. It's my honor to participate in the BRICS Business Forum and take this opportunity to talk about ESG path in China from the credit rating point of view. Next slide, please. As a leading rating agency in China, Golden Credit is a very proud participator. The Financial Service Working Group of BRICS to provide investment credit rating service and analytical solutions. We have just signed the first Panda bond rating contract under the BRICS regions, together with the Russia Rating Agency, to explore the BRICS Rating Alliance business model. Golden Credit is a signatory of UNPI's ESG in credit rating and rating statement, and a member of UNPI Investment Credit Rating Advisory Committee to provide sustainable consulting service to government, enterprise, and financial institutions. We are approved and verified by the Climate Bond Standard Board to play an important role in promoting the development of China green finance. We have released a serious report to closely monitor a dynamic green finance market and review policy trend of ESG in China. Next slide, please. Chinese authorities and companies have made effort to promote reasonable business conduct, sustainable financing, and investment for years. From 2003 to 2007, the regulators emphasized information disclosure of environmental protection, as well as promotion green finance. The second stage is from 2008 to 27, Regulators' guidelines laid the foundation of a sustainable financing system in China. Subsequent measure, initiative, and guidance have helped progress and promote the sustainable investment agenda. During the third stage, which is from 2018 up to today, Chinese Security Regulatory Commission is expected to publish guidelines for mandatory corporate ESG disclosure, which will improve the quality and quantity of ESG data from Chinese listed companies. In the meantime, the financial institutions like golden credit rating also play a key role to drive sustainable development through addressing ESG risks associated with companies directing financial activity. Next slide, please. We found that most ESG leaders could achieve high profitability, low cost of capital, and high credibility to pay debt, while those companies with low ESG ratings normally suffer high capital cost and unexpected losses, which might lead to the possibility of default. Based on our analysis of 1,000 rating upgraded cases, we found that the ESG-related factors have exceeded 50%. Most reasons are enhancing the capital strength from shareholder capital injection, good reputations, and advanced green technology usage. When we reviewed over 500 rating downgrade and around 100 default cases, we also find that the ESG-related factors have reached 50%. Most cases are impacted by social accident, poor management, decision, and on. Therefore, ESG factors have more and more influences when we make the credit rating decisions. Next slide, please. Our ESG standards are as follows. For environmental part, the positive side is to assess the sustainable growth ability from environmental activities, such as pollution prevention and technology innovations. The negative factors are considering how their environmental exposure affects future profitability. In social areas, we evaluate the company's value creations and continual improvement from economic and society side. The negative side to consider the impact of continual operation from social risks. In governance areas, we pay close attention to the company's sustainable manager skills and operation models. The negative side to consider the impact of continual operation of code of corporate governance. A specific framework has also been drawn up for each sector we covered, identifying the relevant standards that allow us to measure clients' ESG performance against the best practice in their sector. That's concludes my presentation today. Thank you very much.
Thank you very much, Dr. Yu. I have two questions for you. Firstly, what do you think this memorandum for responsible financing of developing financial institutions of BRICS countries will help to improve ESG ratings of China's company?
Okay, thank you for asking. This is a very good question. Like I mentioned before, Chinese authorities and companies have made the effort to promote ESG awareness and conduct for years. Looking at the ESG score separately, we found that Chinese companies achieved dramatic improvement on the environmental side. This improvement is consistent with China's environmental efforts, such as the strengthening of regulation enforcement, the phasing out of high energy and high pollution factories or industries, and the promotion of renewable and clean energy through industry policy and massive subsidy. In our view, the performance gap between E and SG is driven by two main factors: relative limited disclosure and the lack of quantification of social governance factors. Now we have seen a steady improving of S and G. As the Chinese government seems to upgrade ESG standards for all the Chinese companies. This top-down enforcement might show its effect faster than expected. Moreover, the opening up of the Chinese market to international investment and the inclusion of Chinese security in global benchmark may lead to increasing integration of ESG factors in investment research and decision-making. In conclusion, we expect Chinese companies to experience more pressure to improve their ESG performance in the coming years. Mandatory reporting requirement, government enforcement, increasing management awareness of ESG will be a strong drive for change. That's all. Thank you.
Thank you very much. And I think I will not put my second question because you're answering on very more information about ESG ratings of Chinese companies and strong and weak sides of Chinese company we saw in your presentation. Thank you very much. And now we need to go to the third part of our session. It's the last part of our session. We heard the information about principles for responsible financing of development financial institutions of BRICS countries. We heard information about development financial institutions of BRICS countries, and not only development financial institutions, also ECG providers and the other stakeholders of finance markets, and how government could help to the business to be more sustainable. And now, in the last part of our session, I would like to speak about two main things. First, then we talk about responsible business conduct. When we talk about responsible financing, which international standards we used the first time? Maybe UN, maybe Equator principles, maybe OECD principles. And I would like to say that OECD organization is the oldest international organization. Of course, very helped us to create this memorandum because the OECD was the first international organizations which created the concept of responsible business conduct in 1976. And today we have a very big experience of these organizations, and to take such things which are reliable and good for BRICS countries. That's why we not only say about such BRICS countries or BRICS standards, we also said that we base it on international standards, UN, OECD, Equator principles, and the others. It's the first thing what I would like to say. And the second thing of this part, I would like to hear the opinion of business community of BRICS countries. We have many speakers, many great speakers in this panel, in this part. But firstly, I would like to present you Elena Gushina. It's Senior Vice President from VEB.RF. She is not in our agenda, but she's a very beautiful woman. And why I would like to present you Elena Gushina, because Elena is responsible, and the key person in the VEB.RF is responsible to communicate with OECD organization. And Elena, do you hear me? Can we hear you, Elena?
Yes. Hello.
Yes.
Hello.
Thank you very much. Elena, tell us, please, why we use OECD? Why maybe we don't need OECD in this context? And what do you think? do we have a future of our memorandum for responsible financing of development financial institutions? Thank you very much.
Hello, everybody. First of all, I would like to say thank you very much for taking part in creating this memorandum, especially during this hard period because of the COVID. But we did it. And of course, I will answer first for your second question. Of course, I'm sure that we have to continue. And if we go back to the OECD, as an experts, they are, as we know with you and everybody, they are very happy that we, the Institute of Development and Banks of Development of BRICS Cooperation, we have started this work. And we are the first institutes and banks of development who decide to incorporate these principles of financing in our politics. What I would like to say, we will for sure continue this work in our bank. Next year, we will do more detailed principles, which we will integrate in our internal documents. And we will, again, let's go back to your second question about the regulations. I think that we will start, as most people agreed, we will start from the light recommendations, but as OECD recommended us, year by year, we will do these recommendations more in a hard form. So I hope that India, as our participants mentioned before, will continue this work, and we will be happy to be in a team. And we will also develop these principles in more detailed regulations and recommendations. About the OECD, for many years, Russia works with OECD company or OECD organization because we think, and now government says it openly, that the OECD is the best expert organization for the best standards. We all know that it's like informal secretary for the G20. And if we will speak about the green financing, we also can say that it's informal, the main verificator for all these ESG principles and all others. And we are happy that even now we are not talking about the politics. Politics, let's, another people will discuss in other meetings. And we're talking about the quality of the life, about the future, how to develop. And doesn't matter, are we members of OECD or not? OECD is working also with the countries which are not members. And all of us are working with this organization in some different fields. And I think that we have to continue this work. And the experts of OECD, they are very friendly, and they always are in communication with us. For example, Russia participated this year in a green forum for green investment of OECD. And we were invited as a speaker after European Union, and it was the first time. So they gave us their let's say field, their space to make our BRICS workshop, as you remember. And Russia, after this forum, was invited to be one of the country to participate in creating the guidelines for green financing. And of course, we will do this work according to the principles which we have adopted, which we have created and adopted on our BRICS space, BRICS field, let's say.
Yeah, Yelena, sorry to interrupt you because we don't have many time, but it's fantastic. We have experts from OECD. It's Barbara. Barbara, hello. As Yelena said, yes, it's wonderful what we can work on one side with BRICS countries, on another side with OECD, and to create some common and really effective standards for responsible financing for development financial institutions of BRICS countries. Barbara, please, could you quickly share with us experience of OECD in the context of responsible financing? And I think I need to put you one small question. What do you think our memorandum, our principles are unique in the context that it's for development financial institutions, and at the same time, it's not limited to specific transactions? Thank you.
Thank you. Hi, everyone, and I'm so sorry for being late, but it's great to be here today. My name is Barbara Bielicz, and I lead our work on financial sector and responsible business conduct within the Responsible Business Conduct Center at the OECD. So just as a little bit of background, one of our main activities is developing guidance on what due diligence processes to identify and respond to environmental, social, human rights risks can look like for different types of financial service practitioners. And we've developed guidance for asset owners and investment managers in the context of investments. We've developed guidance for general corporate lending and securities underwriting for the banking sector. And currently we're developing guidance on project and asset specific transactions, which also involves development finance institutions and export credit agencies. And in this context, the Russia OECD Center has been very involved and supportive in our work. And we've also been engaging in the BRICS DFI Principles for Responsible Finance process. I really commend this process and the initiative to develop principles for responsible financing for BRICS countries. I think it's important to have these principles because it helps to communicate your objectives and standards to the public and taxpayers in the country whose money is going to these financing initiatives in the end. It also makes clear the standards of conduct that you expect from potential projects and clients, and creates sort of a minimum benchmark for activities that will hold development finance institutions a little more accountable. In a way, it is unique to go beyond specific transactions. So in the private sector to date, banks have relied heavily on the Equator principles, which most of you are probably very aware of, which focus specifically on project finance transactions over certain thresholds. And those end up being a limited tranche of global lending portfolios. So much lending activity is often not subject to rigorous environmental, social due diligence processes. So having standards that kind of apply across transactions, I think is important, and also aligned with what we would recommend in the context of our own due diligence standard. I think something else that's very valuable about this initiative and the approach you're taking is the efforts that are being put into aligning with existing standards as well. And I think to the extent that this can be done and done explicitly, it can add really a lot of value. I think first, of course, it lends additional credibility to the principles, allows you to build off existing practices and policies that have been developed and implemented for several years already. But I think it's also important to minimize transaction costs for clients, because often these financing transactions happen in the context of syndicated transactions. You might be working with the private sector or other development finance institutions that will be relying on other global standards. So to the extent that there's sort of mutual recognition and convergence around what is expected of clients or projects on environmental and social management, that really simplifies and facilitates the situation. Maybe to mention two other things that I think might be useful to think of. I know that probably a lot of you on the call are already quite aware of the IFC performance standards and the Equator principles. You might be less familiar with what the OECD due diligence framework is about. It's an expectation that comes from the OECD guidelines for multinational enterprises. It's also included as an expectation in the UN Guiding Principles for Business and Human Rights and the ILO Declaration on Multinational Enterprises. And it calls on enterprises, including financial service providers and DFIs, to identify and then respond to, manage, and in some cases remediate impacts related to human rights, labor, environment, corruption, and a few other issues. It's a standard of conduct and process, so it sort of lays out how practitioners can design policies and management systems, go about identifying risks across their own operations, but also clients and supply chains, and then the actual strategies they can take to try to address those risks and report on them publicly, and in some cases provide remedy. The recommendations of the due diligence framework really more or less align with current standards being used by banks in financing transactions, but maybe go beyond in a few key areas. And those are, there might be more rigorous reporting expectations. This issue of remediation is developed in more detail, and there's discussion about whether financial institutions should have their own grievance mechanisms to handle potential complaints associated with projects or clients. And also the importance of stakeholder engagement is underscored in a little more detail. So that's a little bit the angle that we bring to this. Why understanding the standard might be useful. Well, partially it's a standard that's been adopted by 49 governments and also developed very closely with business, but increasingly we're also seeing it reflected in regulation. So earlier this year, actually last year, a regulation at the EU level was approved for investor sustainability disclosures. It calls on all European investors involved in equity management to report on their due diligence processes. And earlier this year, technical standards accompanying the regulation were published in draft form, but they call on investors to actually report on their exposure across portfolios to companies or activities that don't undertake due diligence in line with international standards. So that might mean assets that you're involved in financing will be subject to those expectations if they have EU investors also involved. The EU is also now considering developing a mandatory due diligence standard, which would apply to all corporates and their supply chains, which again could trickle down to operators in non-OECD and non-EU countries. So just in order to really, I would say, promote convergence, good practice, but also market access and cost saving, it's useful to bring this, understand the standard and really bring it into your own as well. But just to conclude, we really appreciate this collaboration and we're excited to continue engaging with all of you.
Barbara, thank you very much. You know, it's very good that you supported our work, because I think if we work only with BRICS countries, it's good, but we need some third opinion, and we need some guarantees what in the future our principles for responsible financing of development financial institutions will be adopted, maybe not only BRICS DFIs, but others DFIs. And now, based on international standards, including OECD standards, it will help us to have a more hard position in the future in the context of these principles. Barbara, thank you very much for your time. Now we have a small last question for our audience, for our speakers. Please, could we see the question on this? Yes, thank you. Please, what do you think? What non-financial factors gives a higher yield on bonds? Ecology factor, social factor, or government factor? You know that it's in this question, we can see the right answer. We have in this question right answer, because it's not just a question, it's a result of international researcher of Barclays. And please, if we can see the result of voting, put in on the screen. Oh no. Because because today it's ecology factor. I think since 2070, yes, ecology factor gives a higher yield on bonds, not government factor. Thank you very much. Thank you very much for your voting. And now I would like to present you our business community of BRICS countries. And the first speaker is Mr. Kuhn from Industrial and Commercial Bank of China, Deputy General Manager of International Banking Department. Please, Mr. Kuhn, could you share with us experience of your bank, and could you share with us your view on our work on VEB.RF and BRICS DFIs in the context of this principle for responsible financing? Thank you.
Yes, thank you, Antonina. Good afternoon, good morning, good evening, everyone. I'm very glad to attend this meeting and share some of my thoughts and ideas on the topic of responsible banking. Before I introduce ICBC's practices in the fields of responsible financing, I would like to raise an idea, something I always think about. That is for responsible banking or for sustainable development. These are themes or concepts that are very broad or very vague to me, honestly speaking. So what are the specific or accurate definition of responsible financing? I don't think so far I have got any very clear or satisfactory answer to myself. Let me ask you a question for everybody to consider. For rich countries or developed countries, a bank finance a renewable energy project, say a solar or a wind energy project. It is responsible financing, because the renewable energy source will take place, the traditional one, the carbon emission one, like the coal burning facilities. But for poor countries or less developed regions, if we set up a village, a power plant burning coal for the local community who had never have access to electricity, so is it also responsible financing? I don't know. So I wonder, what is your thinking on this? For people, burning some coal, meaning they can protect their children from the coldness in the hot winter. Is it responsible, or it is not responsible? So from this example, I go back to my idea that I don't know what exactly responsible meaning for, but I think the definition better applies to the specific background or specific phases of development. So I'll give a very brief introduction to what ICBC does in this area. Basically, we have done 4 aspects of things. One is green credit. We are not a development financial institution, but we are the largest commercial bank in China. So we have done a lot of green financing, and also we have practiced a lot of inclusive finance to make finance more available to people who need financial services. is also a part of our bank's responsible banking practice. And third is research on standard making, and fourth is the international cooperation. For green credit, ICBC revises our green credit policy on annual basis. We give priority to support credit business in the green economy. We take key indicators such as corporate craft and technology, environmental protection, and energy consumption as industrial customer classification and project assessment standards. We implement differentiated credit policies and guides the green adjustment of the bank's investment and financing structure. Subsequently, based on the Equator Principles and the IFC's performance standards and guidelines, ICBC classifies all domestic corporate customer loans into 4 grades and 12 categories according to the impact of loans on the environmental impact and the magnitude of environmental risk. So as to carry out dynamic classification and differentiated management of different types of customers and loans. Eventually, ICBC improves the green credit guarantee mechanism and carries out special audits for green credit on a yearly basis. For example, by the end of last year, ICBC invested 1.35 trillion RMB in domestic green credit of energy conservation and environmental protection projects and services. 26.42 billion RMB in local currency green bonds and $244 million in foreign currency green bonds. Next slide, please. In terms of corporate social responsibilities, ICBC's inclusive finance focuses on digital transformation. That is to say, we are trying to make easier and faster and efficient access for the small and medium-sized or small and micro companies or enterprises to get funding. And by the end of 2019, ICBC's inclusive loan outstanding was 471.5 billion RMB. And the number of inclusive financing customers of our bank was 423,000. So over the same period, ICBC promotes the financial poverty alleviation projects. That is in line with China's national strategy of fighting against the poverty. So as banks, we provide financing to the poverty alleviation projects, and also we try to introduce more industries and more companies to invest in the poverty-stricken areas to establish, to build infrastructure and to establish factories to attract the labor and to create jobs. Next slide, please. And in terms of research and standard making, in the first place, ICBC was entrusted by China's central bank, PBOC, to lead in the preparation of China's financial industry standard, financial institutions' environmental information disclosure standards. We were also invited to participate in the ISO TC 322 Sustainable Finance Conference to submit the standards. ICBC carried out a series of studies on stress tests of environmental risks impact on commercial banks' credit risk. At present, the 6 stress tests reports covering thermal power, cement, steel, alumni, water risk, and carbon trading have been completed and released on the international platforms such as the G20 conferences, the International Symposium on Environmental Risk Analysis, etc. Lastly, at the end of 2018, ICBC and China Securities Index jointly developed the China Securities 180 ESG Index. In the meantime, ICBC and Oxford Economics jointly launched the Belt and Road Green Finance Index, which was listed as an achievement on the second Belt and Road Summit in 2019. Next slide, please. In terms of international cooperation, in April 2018, United Nations Environmental Program Finance Initiative, the UNEP.FI, kicked off the Principles for Responsible Banking project. The only Chinese bank, ICBC, along with other 27 banks around the world, established a core working group to draft and revise the PRB and joined the PRB in the first batch in 2019. In this year, in September, I was elected a member of UNEP.FI Banking Board to continuously promote the PRB. In addition, the Belt and Road Green Investment Principle, GIP, was jointly issued by China Green Finance Committee and City of London. As one of the draftsmen, ICBC joined the GIP in the first group, is the chairman of the first working group, and leads the environmental risk quantitative research with over 10 domestic and foreign agencies. This year, the first working group has developed the Belt and Road Project Carbon Emission online measurement tool. Next slide, please.
Sorry.
Yes. Yes, Antonina, I am about to finish. Actually, the only last sentence.
Oh, sorry to interrupt you, Mr. Van Kuhn.
Okay.
It's very interesting, and in the context of your speech, just my personal opinion, what is it responsible financing, and why we talk about responsible financing in the context not only developed countries but also developed countries. Maybe I can say that BRICS countries are poor countries, but yes, in the process of development. Because responsible financing cover 9 types of risks, not only environmental, but what is especially anti-corruption risks, and risks then a project don't contact with local community. It's very specific risks for development countries. And we see that, yes, in China, Brazil, and Russia, we talk more and more about environmental. We talk about green financing. It's very good. But to be honest, we also have just people. And thanks to these principles, we would like to decrease the local conflict between community and the project, between community and the company. And I think thanks to DFIs, because DFIs put more money in infrastructure project, we can do it and how to say, to create, yes, new model, new type of project, not only environmental, but also social economy. Thank you very much. Thank you very much for your time. And we have also the next speaker, Ms. Fatima, Chief Executive from 27 Investment Managers. Fatima, could you hear us?
Good afternoon, Antonina, and good afternoon, my colleagues. Thank you very much for putting up my slide deck. I'd like to kick off by saying that I'm going to do something very different to my colleagues that have presented thus far. I'm not approaching this presentation from a DFI or government perspective. Yes, we will talk about incorporating the principles, but I'm approaching this more from a perspective of raising capital and mobilizing investment capital alongside that of DFIs and public markets, so that we can achieve the dual objectives of responsible financing, particularly in developing nations. So good afternoon, esteemed colleagues, participants and guests today. As I've just indicated, I'll focus my presentation on the use of blended finance to unlock the principles and the SDG funding gap that we have. And very quickly, if we can move on to the next slide, I will provide a brief introduction into our firm. We are an asset management firm based in South Africa that are actively involved in the private markets with significant experience in what we refer to as blended finance projects, having successfully matched public sector capital with retirement capital to achieve economic growth and developmental objectives with a focus on job creation, thereby unlocking investment and making a contribution towards the sustainable development goals. We are also an activist investor in the public market space and integrate environmental, social, and governance issues into our investment process. So allow me to get straight into it, and I want to provide you with a few examples, but also motivate the case for blended finance and the successes that it can bring to developing nations in particular. So over to the next slide. The public sector has a very decisive role to play in unlocking the power of private finance. And whilst public finance and developmental finance institutions cannot alone meet the SDGs, and we know that, and of the various solutions that we have looked at and the various approaches in terms of public-private partnerships, to concessions, to subsidies, etc., we believe that blended finance is one of the most promising mechanisms and approaches to bridge that funding gap. And the approach of blended finance, particularly in developing nations, brings together an opportunity to de-risk investments, deliver risk-adjusted returns, and even mobilize the participation at non-traditional capital that would not normally come into such projects, and therefore entice them through the delivery of investment returns and enhanced impact by combining the skill sets and resources of both public and private sector organizations. And in a moment, I will share examples of such blended finance initiatives in South Africa and the opportunity for future investment partnerships. And of course, the principles are critically important because they generate that value system upon which we based our principle-based approach. But as mentioned earlier by yourself, Antonina, this means that operating in ways in which that at a minimum, we meet the fundamental responsibilities in the areas of human rights in terms of labor, environment, as well as anti-corruption. So if we just move on to the next slide, accessing non-traditional pools of domestic and international capital has successfully been done all over the world, as well as in South Africa. In South Africa, we've managed to successfully put together public sector capital together with capital from the retirement fund sector, from the formal savings sector. And currently, if we look at the stock of invested domestic assets into our financial markets, we're talking about in excess of around $700 billion. And that's largely from a regulated savings pool as well as the banking sector. If we look at what's available internationally from the non-traditional funding pools and how that could supplement traditional sources, we're talking not only about international DFIs, but also sovereign wealth funds, and in particular, alternative asset classes, such as the rise of private equity, private credit, and of course, infrastructure funds. And as mentioned by my colleague, and I will reiterate that towards the end of the presentation, the importance of the South African launch of the infrastructure fund that has recently been announced by the President of the Republic, that is to be managed through the Development Bank of South Africa. So there are large pools of non-traditional investment capital that is currently invested in the public markets that can be enticed to invest alongside public capital to achieve and bridge the gap of sustainable development goals. If we move over to the next slide, one such example is South Africa's Renewable Energy Independent Power Procurement Program. This Renewable Energy Independent Power Producer Procurement Program was essentially launched in 2011 out of a need and desire to procure alternative sustainable energy while simultaneously contributing to social and economic development in South Africa. In addition to the supply of clean energy, the program was also designed to contribute to various developmental objectives such as job creation, social upliftment, economic transformation, primarily through broader economic ownership. And to date, 102 IPP projects were procured from 4 bidding round windows, and we expect further windows to be announced, of which window 5 has recently been announced, and the projects are spread through across the country as demonstrated and illustrated on the figure on the right-hand side. And we know that we've had several environmental benefits, which has also been significant. As at the end of 2018, we saw South Africa's carbon emission reducing by about 33.2 million tons, and water saving of in excess of 39 million kiloliters has been achieved. If we move over to the next slide, is a fantastic example of an impact investment partnership with the South African National Treasury's Jobs Fund. And this is something that our business has been involved in through a blended finance initiative. And the focus of the blended finance initiative was to de-risk the investment by the government. And our role was to mobilize 5 times external funding and collectively invest all the capital into the private market space with, again, a focus on job creation, economic growth and development, and of course, social upliftment. And since then, you know, we've deployed around 1.2 billion South African rands into the economy with the purpose of job creation, but effectively demonstrated that you can mobilize non-traditional capital alongside government capital and public sector capital for the common good and bridging the UN Sustainable Development Goals. If we move on to the next slide, and this is where I end off, South Africa has launched, as you are well aware, South Africa has launched a close to $6 billion infrastructure drive and is offering a range of instruments to attract private market private investors. You know, projects will be funded through both the debt markets as well as utilizing a blended financing approach. The Development Bank of South Africa has the responsibility to establish and manage the infrastructure fund, and the fund will seek to de-risk the projects and should be in a position to crowd in private sector players, foreign direct investment and non-traditional forms of capital. And therefore, we invite our partners from BRICS to learn more about the fund, and you can contact us should you need to understand or learn more about the fund. So on that note, hopefully I've brought something else to the discussion to share with you the mechanisms of bringing together other forms of capital alongside DFI capital to be able to bridge the UN SDG gaps. Thank you very much for the opportunity.
Thank you, Fatima. Just a short question and your short answer. What, in your opinion, how our principles can help to stimulate investment in sustainable development in your country?
I think we need to engage. We need to talk about the opportunities because there are many opportunities that exist in South Africa currently that does bridge the gap of the UN SDGs with the delivery of risk-adjusted investment returns. And those are the discussions we're happy to have.
Okay. Okay, thank you very much. And now we have just last two speakers on our panel. Please, I would like to present you Daniel from Banco do Brasil, Head of Investor Relations and Sustainability. Daniel, do you hear us?
Yes, perfectly. Thank you, Antonina.
Thank you.
I assume that you have my presentation. Okay, I'll give just some brief comments about the bank and how we see the sustainability financing inside the institution. Passing to the next slide, I'll give you just a snapshot of what is Banco do Brasil, since not everybody probably is familiar with the bank. The bank was founded in more than 200 years ago, and is the first bank that was listed here in the Brazilian Stock Exchange. We have as composition of the bank, 50% is owned by the controlling shareholder, that is the government. And the remaining portion, we have the free float of about 50% distributed worldwide. We have more than 700,000 investors. Aside the bank is more than 200 years old, the bank is reinventing itself every year. And one example of this, that we are in a quite competitive market here in Brazil. We have a relevant position in the several segments that we compete. We are a universal bank. Aside banking, we compete in insurance, in capital markets, in asset management, and so on. And we're bringing innovation. And a good example is the digital banking, the initiatives that we have. We have more than 70 million customers inside the bank. More than 80% of the transactions are done through the digital channels, internet, and the app. And this brings digital inclusion and banking inclusion. And we are in most of the municipalities of the country, and we have more than 1.7 trillion reais in terms of total assets. Moving to the next page, just put some magnify our loan portfolio. We have 680 billion reais in the loan portfolio, and we are in the several segments, as you can see here, from individuals, companies, SMEs, large companies, governments, and so on. When we extract our sustainable portfolio, our green portfolio, applying the methodology that is used by the Brazilian Banking Association, we have almost 30% of this portfolio that is represents 174 billion reais. And this is distributed in several forms of the sustainable portfolio, from green energy, renewable energy finance, agribusiness, and bringing the best practices for agribusiness. The bank has a relevant position in the agribusiness in Brazil, or loans with social impact. Yeah. Moving to the next page, I just bring, we understand that this journey started a couple of years ago, and probably even before 2001, because in 1995, we signed the Green Principles for the Brazilian banks. And in this period, we are doing several initiatives exactly to reach those standards. I will not, for benefit of time, I will not explore all the aspects here, but just to point out some aspects. For instance, in 2005, we started our sustainability plan with a long-term view. We are just designing the 8th version of this. And how we do this? We go to the stakeholders. We make more than 5,000 interviews to identify which are the key aspects. Certainly, we take into consideration all the international standards, the best practice, and we apply this looking for the next years, because sustainability is a long-term view. And you pass through education. You need to give the incentives for the organization to do all this process. Another thing that I would like to point out is what we call the ABC program. The ABC program is basically low carbon financing for agribusiness. This program reached 15.4 billion reais financed in the last 10 years. We're just celebrating 10 years in this program. And another example that we in 2020 is the geolocalization for agrofinancing. In Banco do Brasil, you can do working capital financing for agribusiness using your app, using geolocalization. Then basically you define which is the area you're going to make the production. We have information about the weather, we have information about the productivity, we have several information. And in addition to this, we are using satellite information, geolocalization information, to cross-check this with the protection areas, exactly to enhance compliance for the institution in all this process. Then we have examples in several fronts. Again, just some examples. Moving to the next page. The next page, just assessing some of the assets that we collected, we built in the last years. Governance is one important aspect, building the policies, procedures, guidelines, giving transparency to this, having the blacklists, or defining and declaring to the market, to the stakeholders, which are the segments that we do not want to work with, and which are the segments that we have some sort of restriction. More recently, the sustainability plan that I just mentioned, more recently, we just launched our sustainability finance framework. Yeah, we made this in cooperation with IDB and Citaui, and the same way as BMG mentioned. And this framework is designed for green, social, and sustainable linked bonds. And we have also a second opinion by Sustainalytics. In the business, the sustainability business as an opportunity that I mentioned, the size of the sustainable portfolio. Certainly administrative practices, we're just launching, or we inaugurated the second solar farm to feed to our own use. And this is, we have planned for the next years more additional 13 farms, then the conversion of the energy matrix for the institution as well, and other measures, for instance, in the private social investments, volunteering programs, our foundation, and also in the social environment and climate risk management. Yeah, classifying our portfolio accordingly to different risks, defining these in the risk appetite, and making all the management of these emerging risks, if I can say this way. Moving to the next and last slide.
Sorry, Daniel, I need to interrupt you.
Okay, no problem.
Sorry for this. What I can say about you, I think you are the oldest bank on this panel. Thank you very much. I'm sure you're a very sustainable bank. Time shows us this. Daniel, thank you very much. Sorry to interrupt you. We have just one speaker on our panel. It's Naina, chairman of Advent Private Equity in the advisory board. Naina, could you hear us, and could you share with us experience of your organization? Thank you.
Yeah. So I'm going to exercise a privilege by being virtually the last speaker to highlight how we might take this agenda forward, rather than run the risk of repeating some of the wonderful examples we've heard today. Other than my association with Advent, I've been chairman of HSBC and sat on the HSBC Asia Pacific boards. I'm a banker more before I'm a private equity person. And I was part of the UNEP International Sustainability Finance Project, which went ahead as recently as 2016. So a lot of the work we're hearing here from many of you is actually even older than where UNEP began to set out what the sustainability agendas look like. And I cannot tell you how excited I am that our Russia colleagues have chosen this as a subject. And as chair of the India Financial Services Working Group and as a member of the BRICS Business Council, I would like to commit, exactly as my colleague Mr. Iyer did, that we would really want to take this agenda forward over the next year if all of you are in agreement. But what I'd like to do is just set out a slightly broader agenda than just the DFIs. I think we must cover everything that has been covered from the DFIs. We've had some very interesting interventions from people like Fatima and others in looking at the blended finance spaces as well. So if I can set it out in terms of where I would see this going forward, there are 4 key areas which I think we're all struggling with. One is the standards. We're all developing standards, but we're all not clear what those standards might look like. So one is the standards, and I think whether we use the OECD examples or others is something which we need to agree. The second is, and I can speak this as a member of the business community, is the transparency and disclosure reports for ESG are, again, all over the place. So I'll give you an example. We have our stock exchange regulator in India who as recently as 2019 has announced that the top 1,000 listed companies in India should carry ESG reports. So that's a good start. But we're still evolving to what that ESG report must look like. And what has happened historically is we have all veered towards the environment piece because that evolved faster. Green bonds insisted on environment, and the S and G parts of it, because they're tougher to monitor, get left behind. So in the Indian context, the S part of it gets covered because banks have priority sector lending, which insists that they lend into communities and cover some of the projects that some of you covered. But that's just a part. It's mandatory, it's required. Companies in India have to spend 2% of their profits for CSR activity. So community activities get covered there. So it's not like companies and countries are not doing things. We're all working in these buckets, but we need to pull this together into what should that report look like on an ESG footing, and ideally maybe even some kind of a rating system therein that works for us as BRICS countries goes. So it's standards, it's the transparency and disclosure of the ESG reports. The third is the products. So one of the products we've heard about is lending from DFIs, but we also need lending from banks. And it's as much about where we will lend as we won't lend. What I mean by that is you can get a progressive institution like any of you who've spoken today, which says this is what we will do, but there'll be someone out there who's prepared to lend to the very project which you say no to because it didn't meet your criteria. So how can we move the industry as a whole in our countries, the financial services sector, to a norm which works for everybody? And we need to do that across products. So green bonds have, of course, developed a wonderful life of their own, which I'm really delighted to see. We heard mention of blended finance from our South African colleague. I think that's, again, a very important criteria. The credit enhancement that goes with ensuring that projects get lent into. We've talked about infrastructure funds. We talked about equator principles. But let me tell you, as equator principles go, HSBC was one of the early signatories to equator principles. We were very clear what we would not lend to, but every local bank in the country happily lent to those same institutions. So there was no point because the project went ahead, even if you worked to a certain principle. So what is that principle, I think, becomes quite important also to involve. So it's standards, transparency, disclosure reports, the products, and the last is the players. So which is the banks, the DFIs, the asset managers. And I think the capital markets play a very key role because right now, large companies who are listed are quite dependent on big money. And the announcements of the big firms like BlackRock and Goldman Sachs and others on where they will and will not put their money determines how a company lists and is able to garner that capital. And if we can have, therefore, a principle by which all of us countries have a norm which attracts that money because we have understood ESG better than others, then we benefit from that money coming in to our large companies. And then have also the supply chains of the large companies comply within the ESG norms so that those large companies drive change down at the MSME level. So we cover it across all categories and therefore have a much wider agenda than the DFI agenda as has been set out. So everything that's been discussed on the DFI front applies, but I would like us to see applying this so that we come up with an ESG agenda for BRICS as a result of the next year, year and a half. even as India assumes the chairmanship, with all your permission. But I must say it's been a fabulous discussion, and many of your companies are very far reaching in terms of what you're doing already, so we can really assemble best case examples and share them through like a knowledge management best practice agenda as well, so that each of us can replicate what is best in the other countries as we see how best to adapt it to our own nations. So that's really all from me as we go forward. And I would just say that I would like to thank each one of you for your sharings today.
Naina, thank you very much. As in Russia, we say, thank you for your warm words. Thank you very much. Yes. And, you know, in the context, what you said about ESG report, yes, it's very important in the context of our principles for responsible financing for DFIs. We also would like to put some mechanism to have a report from each development financial institutions from each BRICS countries to show how they use these principles in practice. It's not a report like report, it's just information and to share experience. Yes, but I think it's in the future, as Yelena said, as Yuri Korsun said, we would like to continue this work, and thank you very much for India, what you will support us in the next year when India will be chairman in BRICS. Thank you very much. Thank you, Naina. And I think we need to finish our great panel. I saw a few questions in the chat box. I'm sorry, we don't have time for Q&A, but I just want to say that principles are applicable to all types of finance and for every client of development financial institutions. How to monitor risks and how to assess risks for small and medium enterprises will show in our practical guidance. I hope that the principles will be published in November after signing these principles by head of development financial institutions of BRICS countries. And we are also looking forward to publish guidance for these principles by the end of the year, I hope. For more information, you can check the website of VEB.RF every time what you want. And of course, our Russia Oecd Center also. And you can write me personally. I was very glad to see all you on this panel. Thank you very much for VEB.RF. Thank you very much for all development financial institutions of BRICS country. Thank you very much for other speakers, which I saw the first time on this panel. Thank you very much, and safe health and goodbye. Thank you.
Goodbye.
Okay, bye-bye. Thank you.
Bye, everyone. Thank you.
Bye, everyone.
Bye.